Yes, that's perfect. Brilliant.
Okay, fab. So as Hannah said, it's a partnership fund. So Social Investment Business is managing the fund, and we're delivering it in partnership with 5 other organisations. So Co-operative and Community Finance, Homeless Link, Groundwork, Architectural Heritage Fund, and Fredericks Foundation. And we'll touch on kind of the partnership and the specialisms of each of the partners and kind of why we've decided to work in partnership as we go through the slide deck. So the fund has 6.6 million to invest. It's due to invest that money by December 2026, so we've got a while. But I think the intention is, if the fund goes well and there's lots of demand, then there may be the potential to raise other capital from other sources. So the fund may be extended, but we will have to see kind of how things go and whether there's capital available to extend it. But we've got a good period of time to invest that 6.6 million. And the money is being used to provide a blended funding package of loan and grant to eligible charities and social enterprises in England. And we'll come back to that shortly. We're hoping that through blending funding in this way and providing some loan alongside grants, and also through working with a range of different partners and together, that we'll expand the reach of social investment to kind of more smaller, medium-sized organisations, all those based in disadvantaged areas. So that's one of the kind of key reasons, I guess, for the partnership, is the desire, the want to kind of reach a more broader range of organisations than maybe social investment typically has or does. And through the fund, we aim to strengthen communities through building the resilience in charities and social enterprises. So you'll see as we get through to kind of the eligibility criteria, it's around growth, resilience, and supporting organisations on that journey. So the fund product, what can you apply for? So the range is between £25,000 and £150,000. That's inclusive of the grant element. And the funding package is always made up of a split of 75% loan, 25% grant. So that's a fixed split. The loan element obviously needs to be repaid, and the term range for kind of repaying the loan is between 1 to 6 years. And that's inclusive of any capital repayment holidays. So we'll come back to that in a moment. And the loan will obviously be repaid with some interest. So the interest rate is a fixed interest rate of 7.5% per annum on the loan balance. And there's also a 2% arrangement fee, and that's 2% of the loan value, and it's added to the balance of the loan. So there are some fees attached to the loan element. The loan and grant are typically drawn down at the same time, so you'll receive both pieces of money at the same point in time, generally in one lump sum. Sometimes other kind of drawdown schedules are agreed. And there is the option, as we said, of a capital repayment holiday of up to 12 months at the start of the loan. So it would mean that you wouldn't need to start paying back the loan element till month 13, although you would start to accrue interest and need to start paying back interest from month 1. So there would be some smaller repayments due in the first 12 months, and then the main loan would kick in from month 13. So the loan and interest are repayable in monthly instalments in arrears, and there's no penalty for kind of early repayment. So if you get 2 or 3 years into the loan and you decide you're doing well as an organisation, you've got the money to pay back the loan, you'll obviously pay back what's outstanding on the loan, but there won't be any penalty or fines incurred for kind of that early repayments. And the loan is intended to be unsecured, so it's unlikely that we'll take security. There might be a few exceptions to that, and where organisations are in agreement, but generally it's unsecured, so you don't need a building or asset to kind of offer up to provide security for the loan elements. It's probably important to note that although you might work with a partner through the kind of application assessment and kind of following bits of the process, the grant and loan agreement between the organisation, yourselves, and the lender, the funder, will be between Social Investment Business and your organisation. And the relationship might be held with one of the partner organisations. So eligibility criteria, you need to be an incorporated charity or social enterprise. And you need to either be one of the following 3 legal structures. So registered as a charity, a community interest company, or a community benefit society. If you're not registered as one of those entities, other entities can apply. It's just that you need to have some key features written into your governing documents, which those 3 entities automatically have. So you need to have a social object written into your memorandum articles. You need to have an asset lock and a restriction on profit distribution. And you can't distribute more than 50% of your post-tax profits. So they're kind of key features of the 3 entities that are set out in point A. So if you're not one of those entities, you need to have those key features written into the governance of your organisation. You need to be based in England and delivering your social and/or environmental impact in England. You need to have a minimum of 2 years operating, and you need to have a minimum turnover of £100,000 in the last financial year. You generally need to be, this isn't a strict eligibility criteria, but the general kind of, I guess, around sort of loan finance, it's more geared towards organisations that are looking to grow or diversify their kind of business models in some way and kind of income streams. And you obviously need to have a viable borrowing proposal. There is the 25% grant, but obviously 75% of the money is loan. So you need to be able to, you need to have a proposal that's going to be able to repay that loan element. And that will be kind of, I guess, assessed during the kind of assessment process once the application comes through. So a SIB or one of the partners will work with you to kind of unpick that model and understand affordability for the loan element. So what can you use the money for? It can broadly be used for most things, anything, including refinancing of other existing debts. So it's pretty flexible in terms of what the money can be used for, and it's unrestricted funds. So some examples of the sorts of things that people have used, I guess, more kind of loan finance for previously are things like purchasing an asset, redeveloping or refurbishing an asset, to continue or grow some existing product or service that's working well, working capital for kind of ongoing operating expenses, and sometimes occasionally kind of acquisition. So they're all things that kind of, I guess, lead well to kind of business growth, business development versus diversifying income streams. So as we said before on the last slide, whatever you do apply for, you must be able to demonstrate that that activity is going to generate you sufficient and suitable income to repay the loan element. So application process, we'll probably spend a little bit more time on this slide, just talking through some of the stages of the process. So firstly, you obviously submit your application form, which is hosted on the SIB website. It's quite a simple form. I think it probably takes 10 to 15 minutes if you've got most of the information to hand. And it's mainly kind of drop-down boxes, kind of data questions, rather than lots of free text boxes asking you to write kind of hundreds of words, outlining your proposal and who you are, and what impact you have. So it's a fairly straightforward application process. There's a few supporting documents that you need to upload, which we'll come on to in a moment, which probably takes most people the most time. So if you can have those together in advance of the application, it will help you when you submit the form. I guess one of the key things with the application form is you're asked to select one of the partners that you'd like to work with. So they will assess your application and kind of be your point of contact up until the investment committee, and in some cases after the investment committee. So it might be a good idea to kind of, before you start the application, have a look at the partners to see if there's somebody that kind of you think fits your organisation, your proposal, what you're looking to do. And we'll come on to kind of partners and specialisms in a moment. So the application will come in, it will be allocated to the partner that you selected, and they will do a kind of bit of a desktop review of everything that you've submitted. They'll probably go onto Companies House, the Charity Commission, your website, and then they'll come back to you probably to arrange either a phone call, possibly a visit, and then it will mainly be to kind of dig a bit deeper to find out a little bit more about your organisation, about your proposal, what your plans are. They may request some extra information there, they may not. It depends, I guess, how straightforward things are when they speak to you. So they will be forming a decision as to whether they feel able to recommend your organisation for investment, and whether the investment package that you've applied for is the right package for your organisation, and whether it's affordable for your organisation. If they feel able to recommend it, there's generally a kind of bit of an internal review process within each of the partner organisations. So they'll take it to a team internally to say, look, we want to put this forward to the Funds Investment Committee. Does the organisation kind of agree? And if it's approved by the internal kind of committee, it will go through to the Funds Investment Committee. So the Funds Investment Committee is made up of kind of a long-standing committee of the social investment business, and they will be making the kind of final decisions on investments. If it's approved at the investment committee, it generally involves, we'll generally reach out and just ask for a little bit more information on kind of signatories and due diligence information. And once we've got that, all the partner will send you the kind of formal funding documents. So we generally send those via DocuSign, and there's a kind of an offer letter and a combined grant and loan agreement for you to review, to sign, to share with your board to get their approval for taking on the loan element. Once you've signed and returned those, there's a bit of due diligence and kind of dispersal process that we go through. So we carry out a few checks, either at SIB or within the partner organisation. Once those checks are satisfied, the funds are then dispersed, so you get your money and you can start to do whatever it is you've applied to do. And then I guess slightly different maybe to some grant funds, the kind of your relationship then moves into kind of what we call portfolio management, either with social investment business or the partner organisation. And I guess it's a loan, so we generally have a relationship and contact with you for the term of the loan. It's intended to be quite a supportive relationship, but we'll generally ask for things like maybe quarterly management accounts, annual accounts, just so we can keep track of how the organisation's performing, and kind of generally kind of annual telephone calls or visits, just to check in and see how things are going. But yeah, it's intended to be supportive in that if your organisation's having problems, there's likelihoods that there's going to be some issues over repayment of the loan for a month or two, we would like you to come to us and share those issues with us so that we can see if we can help support in some way, rather than leaving it until it's a dire situation. So it's an ongoing relationship. So in terms of choosing the partner on the application form, there's some links to the websites of each of the partners at the end of the presentation, so you can go in and do your own kind of digging. But we've got kind of Co-operative and Community Finance, who've got years of experience of providing funding loans to cooperatives in the main. Fredericks Foundation, again, who've got lots of experience of providing funds, generally softer funds than loan finance, so kind of revenue participation, quasi-equity, kind of funds for smaller, earlier stage social enterprise organisations. We've got Groundwork, who again have got years of experience of providing support and funding for organisations working in kind of community action, poverty, the environment. Homeless Link, again, a very experienced organisation tackling homelessness. Architectural Heritage Fund, years of experience in kind of conservation and the sustainable reuse of historic buildings. And then you've got Social Investment Business, who again have got years of experience of providing, I guess, loans, grants, some support to kind of the charities and social enterprises more generally. So there's quite a big range of experience within the partners. I'd say probably for organisations, it's up to you who you select on the application form. I'd say probably if you're working with homeless organisations, it would probably make sense for you to pick Homeless Link. One, because they would probably have a much better understanding of your organisation and the sector that you work within, and they can probably build a much stronger case within their assessment for the investment committee. But also too, they may have kind of more wraparound services and support that they may be able to help you with outside of this particular fund. But again, if you were a homeless organisation and didn't want to work with them for some reason or wanted to work with somebody else, that's fine. If we get an application in, the partners are kind of, we're proactively looking to kind of refer across the partnership. So if SIB gets something in and an organisation selected us on their application form, and they are working with in kind of the environment sector, for example, we may pick up the phone to the organisation and just mention to them that we're working with Groundwork and they have experience in this area, and check in and see if they'd like to kind of move over to that partner for the kind of assessment piece. And if they do, we'll make the transfer. If they don't, then it's fine, they can still sit with SIB, but we'll have that conversation to make sure that the application and the organisation is sitting with the partner that can best support them and hopefully meet their needs and produce and present the best assessment. So yeah, I think probably two things before you start the application form is to start to get together to understand the partners and who you might select on the form, and also to start to collect together kind of the supporting documents that you'll be asked to upload with the application form. So the form itself is quite simple, but you are asked to upload your last 2 sets of annual accounts, your latest set of management accounts, and a 12-month cash flow forecast. So you might need to obtain that information from other people. You might need to look at producing a 12-month cash flow forecast. So finally, before we stop for Q&A, which I think is going to be the most interesting part, we've got a slide, I guess, kind of trying to promote the fund and the partnership and you know, why you should choose us. So I think we're in a bit of a unique position, not completely unique, but the fund is able to provide a blend of loan and grants, which is quite rare. And it provides that grant element, 25%, provides, I guess, some more flexibility for the organisation, especially if they're reluctant to take on a loan or around they've got concerns around the affordability for the loan. The grant element could be helped to kind of support and alleviate some of those concerns. Obviously, the fund's offering unrestricted funding, so unlike lots of grant funding, it's not attached to a particular purpose or a particular use. It's for use to use if it's for working capital or to grow a service. You're not going to get you to provide us with the breakdown of expenditure and hold you to account to spend against each of those budget lines. Terms are quite flexible. In particular, the no penalty for early repayment. So if you do need to repay the loan, or you're in a fortunate position that you can repay the loan element early, that's fine. You won't incur the interest over the term, and you won't incur any kind of penalties for that early repayment. The application form, as we said, is quite simple. It's quite a supportive and transparent process. I think once it gets to assessment, I think the partner or SIB doing the assessment might ask lots of kind of probing questions. I think some organisations have described it to us as cathartic. So it is an in-depth process, but generally through a conversation rather than asking you to provide reams and reams and reams of paperwork. You'll also be assigned a dedicated relationship manager. So hopefully they will follow you through the whole of that journey. Or it may be for the part of the journey of getting the money out of the door, but once you move into portfolio management, you may move over to another relationship manager. But generally, it's a consistent person, and they have a good understanding and a good kind of working knowledge of your organisation, that are happy to help and support where they can. And I think probably one of the main points is that, you know, there's a strong focus on social outcomes and impact, not just in assessing your application and making a decision at investment committee, but in terms of when the loan has been made, the grant has been made, and that ongoing kind of portfolio management and relationship. You know, the focus of social investment business and the partners is generally on how do we help strengthen the social outcomes and the impact? How do we help maintain that impact? So that plays a large role, you know, when organisations run into problems and are struggling. So there's a big focus there, both pre-loan, post-loan. So I think I'm going to stop there and take a breath. I think I've thrown lots of information at you. I think we've had quite a few questions pre the webinar session, and I'm sure lots of people on the call have got questions as well. So what we're going to do now is we'll stop. I'm going to hand back over to Hannah, and she's going to have a look at the questions that have been posted in the Q&A function within Zoom. So if you have got a question, if you've got any burning questions now, please post them in there, and we'll start to work our way through them. So myself, John, James, Suzanne, Tim, we will work through those questions and answer them, and then we'll move on to the questions that we received in advance of the webinar and answer those as well. So we'll hopefully get through, I think we've got enough time, we'll hopefully get through everybody's questions. But please do post them.
Yes, I get the great job now of putting everyone on the spot with the questions that have come through. So I have a list and I have tried to group them. If anyone does have questions that come through, I'll try and add them onto it. I will say, hopefully we'll manage to get through everything and answer all your questions the best answer possible. But if we don't get to either answer your question fully, please feel free to expand in the chat and ask us to clarify. But if we happen to not make it to your question at all, we will be answering all of the questions. We will be uploading them onto the FAQs on our website. So please don't think that if we haven't answered it today, if we run out of time, we will still be answering that question, and we will be sending a link out to where you can find the answers for those as well. So don't feel like we haven't answered it at all. Right, let's get started. So the first question that we had was a bit more general, and I guess is directed a bit more to SIB, and then there's a sub question to partners. So the question for SIB was, why did you decide to do this fund as a partnership? Why did you decide to work with partners on this fund? And I will direct it to Amy or John, whoever feels brave enough to answer.
I'll go first, and then John can chip in, and then we'll hand over. It might be nice to hear from some of the partners and kind of why they've decided to work on this fund. But I think for social investment business, I think we generally prefer to work in partnership if we can. We think partnership makes us stronger. I think the main reason for this fund was so that we could reach a more diverse kind of range of smaller charities, social enterprises, by working in partnership than we could alone, and hopefully better support those organisations as well. So lots of the partners are working in lots of different fields, not just providing finance. So we might be able to better support some of those organisations in a more holistic way. And I think we were quite keen also to kind of build the kind of social investment kind of ecosystem, and work with a range of organisations and people, and kind of share the resource and develop more of an ecosystem within our sector. I hope that answers the question. John, have you got anything further to add?
No, I think that covers it nicely, Amy. Thanks. And just to add that obviously we've had a similar model with previous funds and found it very successful, and for all the reasons that Amy's just outlined.
Suzanne, Tim, James, do you want to give a little bit of why you were keen to work on this fund?
I'll go first. So I think for Groundwork, it's just a great opportunity to be able to work with organisations who are in the same sort of sector as us, being able to support their growth in different ways, in a new way. And I think, being able to provide organisations with what is essentially unrestricted funds during what is a difficult and challenging time economically, and sort of like the flexibility of the funds as well. And it's just exciting for us to be involved in something like Thrive, because it's something that's not been around much before. So it's great for us to be able to just be out there and offering it, and working in partnership with SIB and the other organisations, and we'll be able to take a lot of learning and experience from it all as well. So just really excited to be part of it.
Shall I go next? For Fredericks, we were really excited to be part of this fund because it allows us to offer another financing product to the organisations that we look to invest in. So Fredericks tend to invest at the smaller end of the scale, up to about 50,000, and we do that through a revenue share agreement. So participating as a partner in this fund means that we have access to a greater amount of funds to offer organisations, and being able to do that through the blended product of a grant and loan, which makes the product really affordable, something that was really attractive to us. So we were very happy to be part of it, and as Amy was saying, the partnership model really does help to strengthen the ecology of the sector, and we feel that as a partner in the fund that it gives us that opportunity to help more organisations.
Yeah, and just quickly from me, so Tim from Co-op and Community Finance. Yeah, for us again, it's that sort of that blended mix. We've been going for 50 years, and we haven't really had the sort of same product that could go across sort of co-ops and community businesses we support. So we were keen to be involved, and I think again that strength of partnership is really useful and interesting for us.
Right, I'm going to go on to the next question. Someone just had a bit of a question about choosing the right partner. Obviously, it's really important for them to make sure that they have someone that they have an affinity with. Are we open to having a conversation with them so that we can offer them more advice about choosing their partners before they submit their application? Are STIB and partners open?
Yeah, I think that's fine. I think we're all open as a partnership. I think if there is a partner that jumps out at you that you have a natural affinity with, then by all means select them. If you're not sure who to work with, then I think you can pick up the phone to any one of the partners and have that conversation. We're actively referring among us. So if a partner picks up a call from an organisation and they don't think it naturally fits with what they have typically done in the past and can support with, then they will refer onto one of the other partners while having a conversation with the organisation to make sure they're happy with that.
Okay, we've had quite a few questions about eligibility, so I'm going to cover a few of those next to make sure people get some answers. So a couple of questions that we had was around the turnover, and there were two parts to it. One was, how flexible is the minimum turnover, 100k? Is there any flexibility in that? And the other question in relation to turnover was, is there a maximum turnover that an organisation can have to be eligible or ineligible?
There could be some flexibility on the minimum turnover threshold. I think it's been introduced because we think for organisations potentially with a turnover less than 100k, being able to repay a loan of the size that the fund's looking at over a term of 5 to 6 years might be difficult. So it's looking at kind of the size of organisations and the affordability of that kind of level of loan finance. Having said that, there will be exceptions where people have got slightly different business models or a low cost base or whatever it might be. So I think, yes, we will consider organisations with a smaller turnover if the partner feels that there is a case to be made. Basically, they will need to make a stronger case on that area for the investment committee. So I think probably the best thing to do is work out which partner you would like to work with and give them a call and talk through your organisation, your plans, and allow them to kind of guide you on whether they think it's possible to make a case around a lower turnover threshold. The maximum threshold, there's no maximum threshold, but I think we will be keenly aware that the fund is aimed at small and medium-sized organisations, and there are lots of other funds out there maybe that don't provide the 25% grant, but there are lots of other loan funds out there that potentially could serve the needs of larger organisations. So the blended funding, the 25% grant piece, is intended to make the repayable loan piece more affordable, more attractive to smaller and more medium-sized organisations. So, SIB and other partners here do offer other products and other funds that may be more suitable, more geared towards larger organisations.
So we had another question in to say, if the governing documents don't completely match requirements at the point of application, would this still be something that we would review or work with an organisation with, or would they have to go away and sort this out before coming to apply to the fund?
I think John, partners might be able to add to this, but I think it probably depends on how far off they are. And if they don't meet any of the points, then and it's going to be a bit of work to kind of change their governance structures and update governing documents and register them with the relevant bodies, and then it may not be something that we would look at. But if it's just there's a slight tweak that might need to be made, then potentially. So again, I think it's about choosing that partner and having that conversation with the partner. John, I don't know if you've got anything further to.
No, I mean, exactly that. I think with that point, and I think, going back to the turnover point and some of the other sort of questions I've seen in the chat, is that, there are you have the eligibility criteria there, and it's there for a reason. But equally, if you think there's a case to be made on NES, you don't quite meet one category or another, but you think there's a case, there's a reason, or whatever, then, as Amy said, pick up the phone. If directly to us at SIB or one of the parts, if you feel that they'd be better able to answer that. But probably best to pick up the phone first before you sort of put time and effort into completing the application. But by all means, if you do think there's a case to be made, then pick up the phone and do make it. We can be flexible.
The criteria is kind of there, I think, to make sure we don't get an influx of applications from organisations that generally wouldn't be suitable, but there may always be the exception. And if you think you are that exception, and there is a case like John says, then do pick up the phone. I think there's probably a little bit more flex on some of the criteria than other criteria, because some of the criteria comes from Access, the Foundation for Social Investment, that have provided half of the money into the fund. So some of their criteria may be more fixed, and partners may have less flex on that. But other things like the minimum number of years operating and the turnover are criteria that we've introduced to try and make sure that we're not inundated with applications from startups and people where a straight sort of loan finance probably wouldn't be suitable.
We had another question in from an established charity who was looking to establish a new legal entity, so her CIC, to carry out the trading arm of their operations. Is this loan fund something they could get to invest in that new CIC?
I'm going to get you to answer that one, John.
Again, it's sort of just as a sort of go back to what I said before, it's case by case. I think we have seen, if by that it suggests that the CIC, the new entity, is a new entity, and so probably wouldn't by itself meet the criteria for the fund. But if the parent charity, depending how the relationship is, how the structure is, it may well be that if we can look at the organization as a whole, then yeah, I mean, it's something we've seen in the past. So again, whilst the various, and I saw other questions in the chat about sort of legal structures, things like that, and someone I think also said about we're limited by guarantee or other, and that's certainly something we do see very frequently and can accommodate that. So the structure thing is, again, the spirit of the fund is, as we all are here, ourselves, our partners, and you guys applying, we're all part of the social sector in some way or the other, and that's what we're trying to promote, what we're trying to support. So different structures, there's a lot of structures out there, as Amy went through in the slides, that are already sort of predisposed to the charities or whatever, that are very sort of straightforward, very clear what and how the social mission is enshrined. But if there's other structures, other sort of things out there which don't quite sit with it, but you think there's a case to be made, then again we can discuss and we can look at these things. As Amy said, a lot of the criteria are there to we are, as all our names suggest, social enterprise. That's what we're trying to support. So we're trying to sort of avoid just standard sort of corporate entities in the grant money, I could do with that, and sort of coming in for that. It's sort of, and I very much doubt we hardly ever get that kind of thing coming in. So I think it worked. But so if you look at the eligibility criteria and you think, well, we don't quite fit any of those categories, but, and there's a decent case you made for that, but then by all means pick up the phone and let's talk about it.
Great. Another question that we're seeing is around timescales. So again, on a two-factor, what is the timescale from submitting an application to getting the award? And then another question just generally about the timescales of the Thrive Fund. Is there an application deadline? How long is the fund going to be open for, or does this depend on the number of applications?
So I'll answer the second one first, I think. With the current pot of money that we have, the 6.6 billion, we have to invest all of that by the 31st of December, 2026. So that money has to leave our bank account and be with organisations by then. So there will be some deadlines. If the pot's not extended, the fund's not extended, we don't get more money into the pot, then there will be some deadlines towards the end of 2026 for getting applications in to make sure that we can assess them and get them to investment committee and get the money dispersed in time for that deadline. But we're not there yet. We haven't started to kind of look at deadlines. Potentially, if the fund's really popular, we may disperse all of the money before then. In terms of timeframes for coming through, I mean, it varies quite widely. I think a lot of it depends on how responsive organisations can be. So once the applications come in, how quickly you can speak and meet or via telephone to one of the partners and answer their questions and provide any information that they need. And then again, how quickly, once the investment committee's made a decision, how responsive you can be to requests for things like signatories and bank account details, and how quickly your organisation can sign the offer docs. I think we've seen through previous funds that we've delivered that there have been kind of 3-4 week turnarounds, but sometimes it can take quite a few months. So and it's generally around how responsive the organisation can be, or if there's something kind of technical that comes up and legal advice is needed, or which won't happen very often with this fund because we're not taking security, but sometimes there can be a little bit more of a complicated kind of structure or arrangement. But yeah, I think the requirement generally is that once you've received your funding documents, you have 2 weeks to review and sign those and send them back. And you have 6 months to draw down the funds. Not answered the question directly, but I would say probably, I don't know, it's going to vary as well with partners, I think, and capacity and how quickly they can turn around assessments. So I would see from the point of application coming through and an assessment being made and something going to committee, it might be anywhere between a month, 2 months. And then from the committee decision to the money being dispersed, it could be anything from 3-4 weeks or longer, depending on how quickly you can respond. So we're just looking at a case, I think, next week that hopes to have the money over the summer period so they can do their work by the time they reopen for school in September. So we'll see how that one goes.
And in relation to that, we just had a quick question in the webinar chat asking how often the SIB investment committee meets, so the main investment committee for the fund, how often is that happening?
It's monthly. Yeah, one a month.
If we get inundated with applications, potentially they might need to meet more frequently. In the past, for other funds, they've met bi-weekly. I'm sure they'll be keen not to meet bi-weekly again, but it may become a necessity maybe after the summer period for a few months. But at the moment, they have a standard monthly meeting.
So we had a quick question about the rationale behind the 50% profit distribution rule. If it's not a charity, what is the reasoning behind this, and also whether it lapsed once the loan is repaid, or if it's something we would expect to see long-term reinvestment going forward beyond the loan term.
So the fund intends to invest into charities, social enterprises. One of the markers or judgments as to whether an organisation is a charity or social enterprise is around how much profit they can make profit, but how much profit they distribute. And people like Big Society Capital, Access kind of have set that benchmark of kind of no more than 50% of post-tax profits being distributed as the kind of the requirement for an organisation to be a charity or social enterprise. So I think that would be pretty strict criteria because it comes from the Access. And I think, if somebody's assessing it and we're making a decision on it, it would be on the basis of that would be in place for going forward. It's not something that we expect the organisation to do and then probably drop as soon as they've had our money or repaid the loan. I don't know whether you've got anything to add, John, or a slightly different view.
Yeah. No, I think that's absolutely right. It goes back to the concept of the organisations that we want to support are social organisations, be they charities or some other structure. And what we one of the things that we are quite keen on looking at, not only the the ability of an organization to repay a loan or whatever, but the impact they're having. That's quite a sort of a key piece in terms of what work you're doing in the communities and who you're helping, that sort of thing. So we generally would expect kind of a social-based enterprise to be, to the extent that they're making surpluses, profits, etc., for those monies to be kind of reinvested in the business to continue doing the work that they're doing. That the purpose of existing for a lot of it is to do that work, to create that impact, rather than paying surplus monies to a shareholder or something like that. So I think that's where that kind of the general thinking behind it has come from, and the actual number, I think, as Amy said, has been kind of determined by the bigger player like BSC and Access.
We had a particular question in from an anonymous attendee that said that they are a commercial subsidiary, but as part of a bigger parent body, a charity. Should they be applying for this loan fund directly as the commercial subsidiary, or would it be better for them to apply from the charity parent body?
John, I'll leave you to.
Yeah, so excuse me, that's an interesting one. And if I take a step back, at the risk of not directly answering the question immediately, is to whether or not the application should come from the commercial enterprise or the parent charity. Is really what is the money for? Is it, if the money is to for the commercial enterprise and to be intended to be used for for commercial activities that aren't particularly social in their nature, then that really wouldn't be kind of eligible in the spirit of the fund. But if we're talking, so again, if you have parent charity and the monies are intended for that kind of social use, then maybe it would be eligible, but also probably better to come from the charity itself. But I think, just to go back to the first point, is before we consider which entity should be applying, it really is, well, what's the money for? If it's for commercial activity, then it really isn't in the spirit of the fund.
Would there be anything about if that commercial activity was a trading subsidiary of the charity to provide an income for the charity to? So loan finance is generally good for developing trading income, and so it would depend, would it, on the relationship between the charity and the commercial entity?
Again, yes. I mean, absolutely. I mean, and it comes down to, unfortunately, I apologise that half the answers we're saying is it depends, and it's on a case by case, which, but hopefully that kind of demonstrates as one of the points in the slides with the flexibility. Yes, there are these all the criteria that we've got out there, but they're flexibility. If you think that there's a good reason for for the structure you've got, or should I apply with this entity or that entity, the funds are to do this, which at the end of the day, we want to be seeing some enhancement to the to social impact, if you will, as a community. But as Amy said, it may well be that there's a trading business that is supporting, they generate money from that to support the wider charitable aims of the parent, things like that. So again, it comes back to assessing yourselves. You say, well, is what I'm asking for, is it in the spirit of furthering sort of social sort of equality or whatever, impact in the community. But if in doubt, you pick up the phone and we can discuss case by case.
Great. I think we've got a couple more minutes to get through a few more questions. We had one that said that this organisation already has a grant with one of our partners or with SIB. Are they still eligible to apply for the Thrive Loan Fund?
Yeah. Yes. No. If you have if you're an existing customer, be it grant, be it loan, with ourselves or with one of our partners, that doesn't preclude you from applying to Thrive.
Great. And an organisation is unsuccessful in applying for the fund, are they able to reapply, or is there a grace period that they would have to wait before reapplying?
There's no grace period, there's no naughty list or whatever. It's basically, I mean, it's quite simple. It's why were you unsuccessful in the first application? If circumstances have changed, be it eligibility, be it something in the business model or whatever. Obviously, if nothing has changed, isn't no point waiting a few months and trying again if you've been, unsuccessful for good reason. But if things have changed, then by all means, there is no, and there's no, you don't have to wait 6 months or 12 months. If things have rapidly changed for whatever reason, then feel free to reapply. But just obviously bear in mind, if nothing has changed, it's unlikely to be successful the second time. But clearly there is, if things change, feel free.
Great. So we also had a question in from someone that said that they were looking at blended finance and assessing it via the Reach Fund, which is another fund that SIB has and that also sits with partners. Is this something that can happen via this stream of funding?
Yes, so very quickly, the Reach Fund provides kind of pre-investment support, so it's grant funding to provide support to organisations that maybe have a relationship with an investor, a lender, but they're not quite ready for that lender to take their case to their investment committee, and maybe they need a little bit of help to prepare financial information, or it could be all sorts of things. So the Reach Fund, each of the partners on the Thrive Fund, they are also Reach Fund partners. So if your organisation is a little bit more early stage and thinks it might need some support before it could take on something like the Thrive loan and grant money, then they could certainly apply to the Reach Fund and select one of the Thrive partners to work with. And then their Reach application would go through to that Thrive partner. And then when they're ready, they could then go on and apply to the Thrive Fund for the loan and grant. So yeah, the Reach Fund is a really good tool for organisations maybe that are a little bit earlier stage. The only partner that can't access the Reach Fund is SIB, so don't select us. The conflict of interest for us, because we also manage the Reach Fund. So you would need to work with one of the other Thrive partners if you wanted to access the Reach Fund.
One last question. I realise we're getting a bit pushed for time and we don't want to keep you all here any longer than you need to be. It's potentially a bit of a wider one, but maybe, we can't answer it for the sector, but maybe you want to answer it for SIB or for partners. And there was a question about whether a blended loan grant mindset is likely something that we're going to encourage going forward. Is it going to become something that we're more interested in going forward? And there was a few question around whether charities would still have access to non-repayable finance, but is that something that SIB or partners are looking at doing more of?
I think SIB has provided blended loan and grant fund. I think once we've looked back over the history of SIB and the funds that we've managed over the years, the majority of them have provided blended loan and grant funding. So it's something that I think SIB's done since it first started back in 2004. And that we always advocate for. It can be sometimes difficult to get the grant piece to sit alongside the loan piece. We were really pleased when Access were happy to work with us to kind of provide that blend of funding. So it's something that we will certainly kind of continue to advocate for, to try and make loan finance more accessible to charities and social enterprises. We'll still also do our kind of straight loan products as well. And I think most of SIB's grant funding has always been geared towards investment readiness. So that's the nature of what social investment business does, really. It's about kind of supporting organisations to take on investment. And we appreciate that's not suitable for every organisation out there, every charity, social enterprise. Some organisations just need straight grant finance to deliver services, deliver activities. But that's probably not where SIB sits or where we've ever sat, really.
But I think just from my own sort of view, if people are concerned, so well, is the entire market moving towards more blended products, therefore there's has to be like a repayment element within it, which isn't suitable for everyone. I think it's fair to say that there's still a a large number of organisations out there who are just doing grants, so non-repayable finance. So I think whilst we as an organisation, as Amy said, have always advocated, for blended, and it's been part of the, where we've directed particular fund structures or something like that. I think as a market, as a sector, I think it's not non-repayable finance just by itself isn't going to dry up overnight. There's still plenty out there.
We're not here
and
to
just
reduce the grant funding that's out there either. I think that's the
And just actually, I did see a question in the thing, and because it was a very simple one to answer, was, and because it relates to this, is basically someone else, I think, is it possible to take the grant without the loan? And for Thrive, no, it isn't. It is a blended product, 75-25%. That's it, unfortunately. If you just after a grant, then it would need to be somebody else.
Fab. I realise that we are now slightly running over time, so potentially we are going to wrap up now. If there are any questions that we haven't got to, we will be writing answers and, as I said, publishing them on the FAQs. We also have anyone that registered via the Eventbrite link, we can send out this as a resource as well as answers to those questions as well. So please don't worry if we haven't answered. Obviously, we do want you to keep in touch with us as well. If you have any specific questions that haven't been answered by our general kind of answers, because it's been quite difficult to answer it on a case-by-case basis today, please do just drop us an email. We're happy to come back to you by email, have a chat over the phone. As John and Amy and the partners have said, it will sometimes be very case by case in terms of eligibility or what kind of organisation you are or what aims you have to do with the fund. And we do want to be able to be as responsive as possible. So just drop us an email. Everything's listed on our website, and it will also be on the slides when they're added as a resource as well. We're more than happy to receive questions via those inquiry emails as well, both to SIB and the partners directly. So yeah, thank you for listening. Thank you for bearing with us while we had a few technical problems at the beginning. I hope that you found the session helpful. Is there anything that anyone else wants to add before we close up? No, I think we're all there. Brilliant. Well, thank you for joining us. I hope you have a lovely rest of the day. And yeah, we look forward to hearing more from you soon and receiving your application, hopefully.
Thank you, everyone.
Bye-bye.